Welcome to a new episode of Yahoo Finance's Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a much smarter investor. To that end, really special guest on this episode, really jacked up to welcome San Francisco Fed President Mary Daly in the house, Yahoo Finance headquarters. Good to see you.
Good to see you.
So what brings you here? I mean, maybe you could hang out with me for a little bit.
It's all about hanging out with you. But it was nice to see the holiday decorations. New York's got the best.
We do it right here at Yahoo, and New York does it right too, as well. So, look, I mean, you're hot off the latest FOMC meeting. I mean, before we dive too much into the meeting itself, I think a lot of our users and viewers want to know, why is inflation still so high? Like, when they go to the supermarket, what's going on there?
Well, inflation's coming down,
okay,
but people still recognize the price level's higher than it was, right? Because we had inflation up at 7, then 6, 5, 4, 3. Now it's under 3, but in the news today on the PCE was good. But we're still in a place where we have elevated inflation, a little bit more above our target, and the price level is still high. So people feel that, and it's a regular thing I hear, that I can't afford what I used to be able to afford. The good news is the economy's in a solid expansion, and inflation is continuing to come down. And ultimately what happens when we bring inflation down is people start to catch up and even get better off, and we're seeing that happen. Real wages started growing last year in July, and they're still growing and making progress, and so I'm hoping people start to feel some relief next year.
I had a good conversation, and sorry for the ridiculous name drop here, with Walmart CEO Doug McMillon. A company won our Company of the Year award, and I asked him about inflation and what he's seeing. He said consumers should expect that some prices are not going to go down.
That's right.
And he listed supply chain challenges. Is that how you view it?
It's supply chain challenges. It's also just the cost in general have risen. Mm-hmm. And so we live in a different economy than we did prior to the pandemic. So what typically happens, and this is historically the case over 100 years, is that the price levels don't usually drop. Prices of items don't usually fall, but then wages outgrow them, and so you don't feel that sting anymore. It feels normal again. You feel like you've gotten ahead, and we'll get back to that over time. But I do feel for people who are out there saying, why is the price of eggs? I always hear about eggs. Why is the price of eggs still 3 times what it was?
My mom asks me all the time. I'm not an economist. Just because I work for Yahoo Finance doesn't mean I can flip a switch and egg prices go down.
Yeah. So, but people are paying a lesser part of their salary for eggs because their salaries are rising rapidly. More rapidly?
Does life after the pandemic, with these prices for many things still staying high, does it make it hard to perform what you do and do what you do and like we've seen over the past 2 years, bring down prices of stuff via the tools you have at your disposal?
Well, it actually is, monetary policy is working. And when I go out throughout my community, I have the 12th district, that's the 9 states in the western U.S., but you can go anywhere. You can go into New York, come here. You hear people saying that they do feel the relief of falling inflation. They just don't feel like it's perfect yet. We're not back to where they want to be, and I'm not back to where we want to be either. So we're working on that. But no, it doesn't make the job harder to have to do. What is hard is watching people struggle to pay for things and still feel the effects of the high inflation. So it's motivating. I get up every day working hard to help alleviate some of that discomfort.
Does it make it tougher or is it just going to take longer for policy to work its way through the system and bring prices down?
It really is about, we target inflation, and so what it really is about is we started with inflation really high, so even when we made progress, it still feels unsatisfying for people. Now, it is remarkable so far that we've been able to bring inflation down so much, and the economy is still doing solidly. It's still expanding. Growth is good. The labor market is good. Wage growth is outpacing inflation. Today, personal income came out. It's positive. So I think that's all good news. But because people have been at this for so long, and we've been at it for so long, it still feels unsatisfying.
Within your districts, are there any red flags that you see in terms of demand, the state of the economy as we head into the new year?
I don't see many red flags. People are cautiously optimistic if they own businesses, whether they're small, medium, or large. And workers are staying at firms longer, and they're saying, I'm starting to get a foothold on a career. You remember when inflation was at its highest, people were shifting jobs as fast as they possibly could because they wanted the extra 50 cents or dollar or a different salary. And that job hopping was costing people the opportunity to grow and build their career. They were just trying to stay caught up. So now I see a little bit of breathing room, and that's good.
As a voting member on the FOMC, how does your brain work when you see the PCE index, like you mentioned here, come out, decelerated month over month? What's your first reaction, and how should investors interpret it?
I see this as just enough. It's one data point, so I really don't think we should get too excited about any one data point. What we've noticed is that, inflation progress has been bumpy this year. So I see the PCE report today as good news. I was really pleased to see that real incomes went up. Spending continues to go up. If you're out in New York, you can see people are out there buying presents.
Buying handbags, I see it all over the place.
They're buying everything, and we were at the restaurant last night. It's standing room only there. So I think there's a lot of enthusiasm for the economy, but you still feel that struggle of inflation. So I see a positive data point as a good thing, but I never overreact to one data point. That's a recipe for making mistakes.
True. You voted for the latest, 25
I did.
basis point rate cut. Why did you do that?
Well, it was a close call, frankly, and it took a lot of deliberation, as it often does, with myself and my team, and then also with the FOMC participants. Ultimately, I decided that it was appropriate to reduce it 25 basis points. That will be 100 basis points of recalibration. And I see that as right-sizing the policy rate level to the economy we have, recognizing the progress on inflation, recognizing the labor market's now balanced, well-balanced. There's one job opening for every unemployed worker. That's a perfect balance. And also the economy we're projecting to have, where we have solid labor force growth, labor expansion, and we have inflation continuing to need to come down. So I see the recalibration period now as completed. We are back to the time when we can make our decisions more slowly, data dependent, using the data to affect the incoming forecast, and determine how many rate cuts we'll ultimately do next year. We'll have to be agile and data dependent.
Yeah, and it was those forecasts that I think spooked investors.
A little bit.
Just a little bit here. We saw the action on our platform, expecting 2 rate cuts next year was the consensus. Does policy still have to stay restrictive next year to bring down inflation?
It does, I think. That's my best projection. I mean, we might get really positive inflation news, and we'll react to that if we do. But I do think that we want to make sure we finish the job. The history tells us that resolute behavior to finish the job and get inflation completely to 2. One, Americans depend on it. That's also part of our trust and credibility, and that really helps us. So we are resolute to get that job done, and that will mean restrictive policy through the year in all likelihood.
Can you rule out a rate hike? Because I know Fed Chair Jerome Powell, he made his case clear. How do you think about it?
Well, I never rule out anything, honestly, because that's a recipe for being behind or making mistakes. So I don't rule anything out, but I can tell you where I think the most likely place will be. We could have fewer cuts than 2. We could have more cuts than 2, depending on the data. Of course, if inflation, for whatever reason, started to accelerate again, then absolutely I'd be supportive of adjusting the rate upwards. But I don't see that right now on the horizon. But that absolutely would be how we would respond if we saw a re-acceleration of inflation.
So the next Fed meeting, end of January?
Yes.
In 2025?
Yes, exactly.
What will, outside of inflation readings, what do you think is the most 1 or 2 reports that you put stock in that will help you inform your decision?
So, obviously we watch the inflation reports, we watch the labor market reports. We want to make sure that inflation continues to come down and that the labor market doesn't falter. I don't want to see further slowing to the point of weakness in the labor market. I don't see that right now, but we'll watch those data. The other thing that's really important, and your listeners might not know, is the published data are only one small source of the information we're getting that helps us make good decisions. So Reserve Bank presidents in particular spend a lot of time in their districts, in the field, so to speak, talking to businesses, to unions, to workers, to community leaders, asking what's the lived experience of the economy and what do you think is going to happen. So I'll be looking for that type of information, asking firms in particular, what are you doing in terms of your hiring plans? Do you have any layoff plans? Do you feel you can pass along price increases to your customers? Right now I'm hearing no, and I'm hearing that they're not really brushing off their layoff plans. They're just thinking carefully about the level of amount of hiring they do, and they're thinking carefully about whether they refill jobs if people attrit or leave the jobs. So I think all of that is is what we'll be looking for. And I'm also going to really follow up on this sentiment shift that I've been seeing. It really has come since the summer. In the summer, the recession risk faded for firms, and they thought, well, we're a lot more cautiously optimistic. A lot more cautiously optimistic. There was a lot to unpack. But ultimately, I think they have a positive sentiment, and I want to see if that follows up with spending.
All right, President Daly, hang with us. We're going to go off for a quick break.
Sure.
We'll be right back here
Sounds
on Opening
good.
Bid. All right, welcome back to Opening Bid. Having a fascinating conversation here with San Francisco Fed President Mary Daly. Before we do, I want to go a little more into some other topics, the outlook for the labor market, but I just want to go back to rates. So you're not ruling out, I think the market interpreted this is a Fed that is done cutting rates. That's the wrong way to interpret it.
That is the wrong way to interpret it, my judgment. I do not see that we're done cutting rates. I just see that we're going to adjust rates at a slower pace. There's this really well-known piece of literature by former Chairman Ben Bernanke, and he talked about when you're uncertain and you have a lot of uncertainty ahead of you, you should practice gradualism. And it's this concept of, going slowly to make sure you know where you're going before acting. And I think that's how that's what I intend is you saw 2 rate cuts as the median of the SEP. That is a positive sign for continuing to cut rates, but it means we're going to slow the pace.
What is it like to be in these rooms making these decisions?
Well, it's a lot of responsibility, and I think of that as a privilege and an honor, but I also take it extremely seriously. The way that the FOMC has worked since the time that I've been involved with the Fed is once you cross that threshold, you go in a room, we're all around the table meeting together. When you cross the threshold of the room, you put everything else aside, and all you think about is the dual mandate goals, price stability, full employment. Congress gave us those goals, and doing our work on behalf of the American people. And if you listen to Chair Powell's press conferences at all, you hear him say the same thing every time. Our work is meant to serve the American people, some version of that. And that's how you really feel. So every decision when I'm voting and I say my vote, my response, I'm always thinking of the faces of all the people I meet when I'm in the 12th district or anywhere in the nation. And that's what it's like to be in the room. It's a vigorous debate, but we debate well without being disagreeable with each other. And I actually think that is just part of what makes our policy decisions better is we're definitely working together. We're debating. We're taking different perspectives. We're playing devil's advocate. But what if this happens? And you put that all together and you do it well as good colleagues with one shared mission, which is to serve others. It's the best job you could have.
I hope I have this right, but you left home at 15 years old?
I did. Yes.
Do you reflect sometimes like, holy cow, I'm making a change or a read on policy that could impact really the world? Look how far I've come. Like, do you still have those moments?
Oh, yeah. I think if you came from where I've come from, you have those moments every day. It makes me so serious about the work I do and the importance of it. I grew up I was at the tail end in my teenage years. I'm at the tail end of the high inflation of the 70s. Mm-hmm. And I remember my parents and all the parents in our community, they would have these card tables, which young people probably don't know what those are, but they have 4 legs. They're foldable. You put them up.
It's cards. It's like tables cards, and the actual cards. They're paper things for younger people.
Older people used to play cards. I don't play cards, but people played cards. Yes. Social activity. They had a card table. But in the communities that I lived in, people would use them on Sundays. They'd set them up and they'd do their bills because we still had pen and paper. Write the bills, send it in by check, and countless families in my community would have a stack of bills they couldn't pay because of the inflation and a stack of bills they could. And as the inflation continued, the stack of bills they couldn't pay grew large and the stack of bills they could pay small. And then Volcker had to come in and really raise interest rates to get inflation down. And people lost their jobs in my community, and now people didn't have anything. Mm-hmm. They had been robbed by high inflation, and then they lost their jobs in the effort to bring it down. And I think of that every single day as we fight this high inflation, and we try to do it gently so that we don't break the economy. So when I voted for the 25 basis point additional cut to get that full 100 basis point, I was thinking of 2 things. Policy needs to be restrictive to bring inflation down, and we need to do it well enough, that decline, that we don't kill off the labor market or strangle it and then leave people without employment. That is not the promise we've made.
If I've learned anything, I've been doing this, I think I still look young, but I'm doing this for over 20 years.
You
And
do look young,
I appreciate
actually.
it. Thank you so much. One of the things I've learned covering the Fed is that you don't get involved in politics. I get it, so I'm not going to go in that route. But from what you've read and heard about the incoming administrations, their various policies, do you think that will make your inflation fight tougher?
It depends, honestly. And so one of the things that you can see in any administration that comes in, doesn't matter, you look over time, our history, when a new administration comes in, they always come in with a slate of programs and policies. And those slate of programs and policies can often interact with each other. And what matters is the net effect. So think about the policies that are being currently discussed for next year.
Tariffs, tax cuts.
Tariffs, tax cuts, deregulation, and border policy. Those have potentially offsetting effects. Tax cuts typically spur growth. Immigration might change how many people are in the labor force. Tariffs could raise costs, but they could also spur new domestic investment. And deregulation, could help spur some investment if people feel constrained by regulation. These are all things that it's very unclear. The second part of that puzzle, not just the net, is it depends on the scope, magnitude, and timing of all the changes. I mean, if the changes are drawn out over a 4-year period, they're much more muted effects than if they all happen like a light switch. But policy rarely changes like a light switch.
Is it do you anticipate it will be difficult to be data dependent?
I do not, but data dependence doesn't mean that we wait for the latest data to come out and then now we have the clear picture. Data dependence means we are maybe we should change the phrase from data dependence, because people think of the data means a specific thing, to information dependent. We rely on our models and our the history and the evidence and the analysis to guide us, but without the incoming information, we can't really know whether the theory is going to meet with practice. So I think of data as a large and expansive word. It's plural, first of all, and it means what people call the hard data, but it's really the data that comes out that's published, quantifiable, and then it's all the information we collect from our contacts when we travel the country that tells us what firms are thinking about doing and whether workers are going to demand a wage increase. Those are also data, and they also matter for our decision making. And so really maybe the new word for the new year, it's always good to sort of refresh yourself for the new year. We are an information-dependent Fed.
I like that. That's
okay.
Good.
It started here.
Yeah, I appreciate that. So then, last I want to touch on two other things, but do you anticipate some form of wage or price spiral as all these things come together? To me, it sounds like, wow, prices are going to go up even more.
Well, we haven't had a price spiral, and this is really something to think about. We did not have a price spiral after the pandemic. We had higher inflation, but we were able to beat it back. And that was a place where people were just running out and doing and buying everything they possibly could because they'd been pent up for so long. And we had very limited supply of anything. Not even, we couldn't get bicycles. It was hard to find a hotel room.
Shelves
remember?
were barren. It was really weird.
It was weird. We couldn't get glass jars for spaghetti sauce. You remember that?
Yes,
and they were like,
actually.
what are they going to do? So they started putting it in freezer tubs. But, that's what all those things did not cause a spiral that was out of control. They caused a period of high inflation, which we then aggressively responded to. So we already know that we need to work on inflation now. It's beyond 2%, so we're working to bring it down. And I'm not as worried as things, I really do think a way that I've learned to think about this as an economist and a policymaker for all these years is it's really important to not think of things happening immediately and then being out of control. Really how things happen, whether they're policy changes or inflation, is they creep up on you slowly or they change slowly, and you can get a handle on them as long as you know what to look for. And we know what to look for.
On the quasi-topic of politics, Janet Yellen, your friend, what do you think her legacy would be? Of course, Treasury Secretary, former Fed chief, and former first female leader?
Let's do the list. Let's do the list. She's professor at Berkeley, then works she's with the CEA, and then she goes on to be a Fed governor. She was a Fed governor. Then she becomes the president of the San Francisco Fed. Then she becomes the vice chair of the Federal Reserve. Then she becomes the chair of the Federal Reserve. And then she becomes Treasury Secretary. Janet Yellen's going to have this legacy. I call her my colleague, my mentor, and my friend. I just saw her this week. She's going to have her face on some part of our currency. She should. But her legacy in all of those things is she defines what public service means. She never thinks of those titles as, oh, look at my power, look at what I have. She thinks about it, look how many people I can serve. Look at how I can serve them. So Janet Yellen is the person who taught me that the economy is about people. And she said, if you don't take account of that, if you don't understand all the people that work on behalf of the economy that make up the data you see, then you fail in your job as an economist, and you fail very largely as your job as a public servant. That's her legacy.
Why do you think she's been able to be so successful? I mean, her stamp on the economy and business past 30 years is almost unrivaled.
I think it is unrivaled, right? It's really unrivaled, almost unrivaled. I think of it, I'll just say unrivaled. I'll be bold. I think her success always comes back to three things. She is humble and takes the job with the tremendous sense of responsibility that it's given to her with. She puts people first, and she is really, really voraciously curious and evidence-based. If you put those things together, I have a sticker that I give out to people, I put on my computer, because someone once asked me, when I first took this job, how do you make policy? And I say, and I'm going to break the news here, okay? Here's what I say that everybody knows. I say, I practice three things. Be curious, voraciously curious. Be confident when you take the decision, because people depend on you to have done all your work and be confident. And then immediately after, you have to be humble enough to ask, did you get it right? Yeah. Guess where I learned that? She didn't tell me those words, but I learned that three-parter from Janet Yellen. I watched her. So that's her. She's going to have a strong legacy, and I think she's been successful because she's that way.
Amazing. Lastly, before we go, we always like to leave like a minute or two for a hot take on whatever it is.
Oh, a hot take.
But
okay.
I will keep it in your lane. Do you view crypto as comparable to gold, or is it something else?
Crypto is a word that people use to mean a variety of different things. So I always ask when somebody brings up crypto, I'm like, well, what part of crypto do you talk about? Are you talking about a digital currency? Are you talking about Bitcoin like an asset? That's an asset. There's a fixed quantity, goes up and down in value as people want it or don't. So I see crypto as a complicated thing, and the service we need to do for everyone is really unpack what we mean and call it what it is once we've done that. So it's a digitalization of a whole variety of things. It can be a currency. It can be a medium of exchange. It's not a currency in the U.S. It can be a medium of exchange. It can be a stock, an asset to hold value or sometimes lose value. And so we just have to define those terms. So I don't think of it as like gold. It has properties like gold sometimes, but I don't think of it like that.
Do you think it has the bona fides to someday be a currency?
A currency is got a specific attribute that so far the technology would, and other countries have investigated that. We don't have that. That's Congress's job to decide whether we have a digital currency for the U.S. But the property it needs has to grow as the economy grows so that its value doesn't change just because more people want it. So when more people want a dollar bill, the dollar bill doesn't rise in value. What causes the dollar to fluctuate is the economy and how fast our growth is relative to other countries. So that's a property it's going to have to perfect to be a currency.
Good take. We're going to have to leave it there. I don't know how I got about 30 minutes with you, but I thank you for coming here.
My pleasure.
To Yahoo Finance headquarters in New York, San Francisco, Fed President Mary Daly. Thank you so much. We appreciate it.
Absolutely. Thank you.